So I love this quote because a lot of my clients are artists and freelancers and entrepreneurs, and they always say, oh, I don't, just want to do what I love and the money will come. And so I say, making money is art, and working is art, and good business is the best art. So I really wear a few different hats. So my corporate background is I started out on Wall Street as a bond research analyst, and I always come back to that I love cash flows, I love numbers, I really like looking at like just projections, like where we are today, where we're going to be a year from now, 10 years from now. And I've done it really on corporate individuals, and now I'm working with a lot of small businesses and startups. And I have found uniformly people that track their numbers are more successful. And so what I really want you to walk away with today is just what are the key KPIs, what I call the key performance indicators that I can track for my business. And I'm giving you lots of examples, but if you don't do it yourself, find someone to do it for you, hire a good bookkeeper, a good virtual assistant. But again, just from startups that are raising money, from people that have a business of 100,000 a year to, businesses of 10 million, people that really just know their numbers and keep track of their numbers have more success uniformly. So I did bond research, and then I started doing independent financial management. So I'm an independent financial money manager, financial planner. So I work on an hourly basis, and then I do a lot of speaking around that. So like one of my big clients now is Hospital for Special Surgery. So I'm doing a 4-part series for their female physicians, just all on independent money management. And I teach at Barnard, I taught at Sacred Heart University, I teach a class at Yale School of Management around that. And then I've become a very active angel investor the last 8 years. So I'm doing something now with the state of Connecticut. We've got a new fund that we're like of women investors that we're putting together. We actually have a name, we've got some sponsorship money, so I'm excited about that. And I work with a national group. And I work with counseling business owners. So this has really been the presentation today is around my business owners so this particular group earn about 100, 250,000 and more. And so these were the numbers that we really wanted them to focus on so they could just really get to the next level of their business. So to me, what I see is people who keep track of their number, finances seep into every area of their life, whether they think it's going to or not. They have higher self-esteem, they can ask for more money, they can negotiate, they can be really clear about what do I need to pay myself. So very often, like this one woman I'm working with right now, the first thing I said to her is, well, what do you want to make on a monthly basis? Forget about your business, but what do you need to walk home with? Is it 5,000 a month, 10,000 a month, 20,000 a month? So we started there, and then we worked backwards and said, okay, what does the business need to earn? And then what are your expenses? And she had never thought about it that way. So I have an old book in my bookshelf here called Profit First, which is a great book also. Buy it used on Amazon for like $1, but it's just the mindset of like, how do I take care of myself? And then let me figure out how to make money from there. So learning. So this is a really big presentation. So I was actually looking at it last night and I'm like, what can I cut? But I was like, you know what, at least I'll give you the PDF, Felicia and Samantha. So if people want the presentation, they can. So this is a great exercise is where do I want to be 12 months from now for my business? So there's different ways to look at it. So right now we're May 11th, like where do I want to be for my business a year from now? Like what is the revenue for my business? What is the dollar percentage, the breakdown, my B2B, my B2C. So this second example, the 1 million revenue is actually a client in Westport. She runs a great OT practice, occupational therapy practice for children. And she said, I want to make $1 million in the business. So we literally worked down to, okay, well, how much can you charge? I charge $150 an hour. How many clients do you need to see per month? How many clients per day? So she's like, well, I can't see 28 clients, but maybe if I hire someone a few days a week, she's making $1 million now. And she was literally making like 150 like 2 years ago, because it was just, so now she was like, okay, I need to focus on getting 500 clients, 50 clients a month. How do I structure that? So it was almost like easier numbers. This second example, the top one, the million revenue, this is a food product that I've worked with. And again, do they sell in big box or small independent grocery stores? What are their sales? How many cases do they need to sell? So think about where you want to be a year from now, and then work backwards. And then there's also a great funnel exercise. This is a marketing exercise. Felicia actually talked about this in the salon, saying that if I know I need 4 new clients a month, let's work backwards. How many proposals do I need? How many conversations should I have? So I always come back to the numbers like that. So these are my KPIs. So what I would suggest, if you don't keep track of this, and again, my clients that do this literally see growth. So literally get a Google sheet or Excel spreadsheet. What is my revenue? What is my expense? What is my profit margin? And so, sometimes clients are afraid of spending money, but if they see their profit margin is either consistently staying the same or going up, it doesn't matter from that perspective. How many clients do I have and how many prospects do I have and what is my conversion rate? Those are 3 key numbers. How many proposals am I sending out? What is my win rate? How many emails am I sending per week on a prospecting basis? How many meetings do I have? And then social media. And again, it's a very simple spreadsheet, but I've seen this over and over. This is a great KPI to keep track of. So this is if you're just starting out or if you're like a little bit earlier stage, like I like to compare our personal finance versus our professional. So on the right, what is the revenue that I'm bringing in? COGS, if I'm selling a product or if I have a costs, my gross margin, then my general expenses. And on the personal side, my income minus my fixed expenses is my gross profit. Then my variable expenses like food and clothing is what's left over to save. So this is just like, I like looking at this side by side, really looking at this together. So what I'm going to cover pretty much is that there's 2 statements, and this is that there's no excuses, know these statements. And I don't do my own statements. I have a great bookkeeper, or you can do Quicken or QuickBooks, or Bench is a great, I think I give you at the end here. Oops, sorry. Just want to show really quickly. Scaling and automation, ongoing. I thought I listed all my, oh yes, here. So Bench, so just some other systems here. Anyway, just want to make sure. So what I want you to think about is there's 2 statements that you should be looking at monthly. And if you're starting out, I would say a little more regularly, but easily monthly. So the first is your profit and loss statement. So this is literally like, so the reason this is different from the cash flow statement is that you might have earned money, but you don't necessarily have the cash because of accounts receivable. So maybe people haven't paid you even though you've earned it. And that's actually an issue with one of my big clients who does consulting for nonprofits, and the nonprofits are just really, really late in paying, but yet she has employees to pay. So she's dealing with a cash flow issue. But so knowing your profit and loss and really seeing, this is a 5-year projection, which is not realistic, but at least do a 12-month projection or 18-month projection. Really looking at your sales versus your margins, your expenses, your net income. So even if you don't know how to create them, learn how to read them. It's your business, it's your company. If you're not making money, when are you going to break even? When are you going to start making money, especially if you're in startup mode? The cash flow statement to me is just as important, if not more important initially. So it's really, you start with how much cash do I have in hand? What are the cash receipts? So what have I earned for that period income wise? What do I have to pay out for that time period? What is the net change there? And then what is my final cash position? So especially if you do have a product or if you want to spend money or if you want to do forecasting, it is so, so important to really like know your cash flow over a period of time. So this is just an example of the cash flow statement. So number one, what are the key cash drivers for your companies, like operating expenses? How does it compare to, I mean, it's a little bit hard with COVID, like a year ago, but 2 years ago. Focus on collecting payments from customers. So if you're not, Felicia, obviously with Haven, like you're just charging them automatically, but I can't tell you how many clients like don't take invoicing as a priority. So I'm like, are you invoicing first thing? At the same time, can you just reduce monthly expenses by 5%? Can we look for 5%? It's a great spring cleaning exercise to do, because there's 2 ways you make money. You reduce your expenses, you make more money. So it's a little bit of a dancing game. And I think it just really allows you, like, how is your business? Is it seasonal? Is it based on certain timelines? Like, are there certain, like get to know your business. And sometimes looking at cash flow over 2 years or 24 months, you can really gauge, oh my gosh, we tend to be slow in September, or not. And it's just a good way to really forecast pitfalls. So again, this is an easy statement that while you're running your P&L, your profit and loss, run your cash flow statement. So 3 key metrics: revenue, what's coming in, your net income after expenses, and the cash you've got. So just really like, again, knowing that as your KPI. Just giving you some expenses. This is for those of you that are freelancers and like real individuals. This is something I've created for my freelancers union for people that are just really looking to make more money or just different ways to make more money and just be a little more resourceful from that perspective. I go back to the financial plan. If you're really working by yourself, is track your income, invoicing clients, set aside money for taxes. I'm a big fan of setting up savings accounts for different purposes. So I actually have 5 savings accounts I'm at Capital One 360. So I have a tax savings account. I have my emergency savings account. Actually, I've listed here. So I have my emergency savings, I have taxes. So I pay about 30%. So literally I get paid, I take 30%, put it into my tax savings account. So every quarter when my accountant emails me and says how much I owe, that money's there. I don't have to worry about it. And I just literally tell her to wire it from that account. I have a savings account called Save to Spend for vacations or furniture that I have permission to empty out. And then I put money just into a retirement savings account. And then every quarter I transfer it to Fidelity to go into my SEP IRA. And then I save for business savings, like for travel or computers or just like bigger business expenses. I know I'm kind of going into the personal side, but this is something that I think people that work for themselves often forget about. Variable income, just really like right away, like take your money that came in, especially if you get paid big on projects, and put that into different accounts. Talk a little bit about taxes. So working backwards on how much to charge. So you want to charge obviously what the market is bearing, but you also want to think about what is the minimum that I should charge. So this kind of takes your personal life into account. Here's my expenses, my personal expenses. So I know that regardless of what I'm making, I need to make, in this example, $58.50 per month after taxes. So that means before taxes, I actually need to earn close to $100,000. So if I need to earn $100,000, how much should I charge? So if I charge $200 an hour, I need this many clients per week. If I charge $2,500 a project, I need this many projects per month. This exercise has changed people's lives, literally, because people are either undercharging or they don't realize how many clients they need to get or how much they should charge per project. And it just really like escalated how much they could take care of themselves. I know I'm talking fast in the interest of time. Here's some of I've literally put this together for all of my freelance clients. So if you work for yourself, like one way to make more money is to really automate as much as you can. And so doing that through scaling and automation, that's a big startup word. So through social media, through your bookkeeping, through email automation, through customer support. Like I have a client, I have 2 clients that are lawyers, and one of them, I think she's earning $25,000 to $30,000 a month. And she basically has like a paralegal and a virtual assistant, and the rest is all like customer support, her CRM, she's done, using Google Docs. She's like outsourcing everything. It's just amazing. She's an amazing attorney in Bridgeport working on immigration law. So just on an ongoing basis, what is your bookkeeping system? Make that a priority. Do you have a bookkeeper who's putting these numbers together? Bench, more and more, I don't know, Becca, if you have clients who use Bench on a professional basis, but more and more of my clients are using Bench, which is like Quicken or QuickBooks, but it's more user-friendly. Look at your statements once a month, change your projections and assumptions regularly. Like I literally met with a startup this morning and they're going to get advertising revenue from a digital basis. And I'm like, well, how much are you going to charge? Like these are your projections and your assumptions. And even if your business is pretty standard, still really look at that over the next 12 months. Know your numbers, know your KPIs. And I've given you this here on a quick basis. My first book that I wrote 10 years ago was a book that combined money affirmations with money management tips and workbooks. And I have an MBA in finance, I have an undergrad degree in accounting, but I also believe money is about affirmations and our attitude and the people we surround ourselves with. So I always finish my presentations with affirmations. My favorite is surround yourself with positive money people, and I'm an active participant in my finances, and there's more here. So that's it. That's the very quick and dirty presentation. Again, I'm happy to share it or take any questions. But I think no matter what, don't put off knowing your numbers until you have to or until it's time to do taxes. Those are really the two experiences I have found with many of my clients. But make looking at your business finances a priority, your P&L, keeping track of your numbers. So if you're not just doing the P&L, take it a step further with KPIs, looking at your cash flow, because that often I have a client, she's literally, this is the one who's the nonprofit. I think her business revenue was 800 or 900,000 last year, but she had no cash. So she's like freaking out about that because she's got about 7 people who work for her. And if you can, just right away, just reduce your expenses by 5%. What can you do about that? Okay. Any
Yeah.
questions? I know I've got about 5 minutes.